Morning, everybody. Hope you guys are doing well. Let me ping everyone else. All right, so sent out the daily bias for today. We'll quickly go over that on the hourly chart right now. Actually, let's go to the 4 hour. 4 hour, it kind of looks like a market maker sell model in here. Even on the 1 hour as well. Down over here, original consolidation. We do also have a daily inefficiency below that. So we could potentially get down into there, maybe even the daily order block, weekly order block. We already kind of touched it. But anyways, going to the hourly chart. Came back into this order block, held it, also just barely wicked into this inefficiency. We're starting to move lower. So to me, it looks like an internal range liquidity. Not really premium, but IRL. Oh, it was premium. Premium IRL to external range. Looking for previous day low. On the 15-minute chart, we also have SMT at the highs here, which I can show over here. Okay, look at Asian highs being swept on NASDAQ and now on NQ on ES. And then we do have some relative lows in here, swing low in here, swing low in here. So all of this to me looks like low resistance liquidity. I was building since yesterday, a lot of stops in the form of sell stops below us, whilst the buy stops in my mind are being constantly purged, so we can't go back up. So looking for an open high low close profile for today. We also just filled in the efficiency on the 15-minute chart, which should mean we should go for the ERL, which would be previous day low, and the ERL from PM session. So send that to prediction chart right now, 15-minute IRL to ERL. To sell side. We do also have this first presentation gap starting to form. We have a slight order block here. So looking for this 15-minute gap to be used as inversion eventually, but all the targets are below us. I've got previous day low and then this hourly inefficiency with an hourly order block, just a little bit refined down. So if we wanted to reach down into there, then be looking for around a consequent encroachment of this hourly imbalance rather than the premium end. We do have 8:30 news tomorrow. It shouldn't be a huge effect on today's price action, but still good to note since we have no news today. 8:30 news tomorrow, we can get somewhat of choppy price action, just a little bit lack of time-based elements occasionally. But since we have NFP protocol, then we're looking for today to be the last kind of high probability session until Friday. So every NFP week, you're really going to be looking to trade between Monday and Wednesday AM session. So Monday, all of Tuesday, Wednesday up to the AM session. So really until noon. And then you're going to skip from noon all the way till Friday post 8:30. So you're going to skip and then Friday post 8:30. Technically you could do, if you wanted to, 7 a.m. till 8:30 a.m. or I guess 8:29, not trading NFP, and then post 8:30. But this is really going to be the main one that I'm going to be interested in, is after the NFP release. So this is your NFP protocol. Obviously, other weeks that do not have NFP, you would preferably not look to trade on Mondays, not look to trade on low probability days that may have news the next day, things like that. But every NFP protocol typically has the same kind of news throughout the week. Normally there's typically a Tuesday news driver, but a lot of times you get this kind of consolidation reversal on Thursday, continuation on Friday, or just a classic classic sell or buy program on the weekly chart, like on the 4 hour, I guess. So far we're holding bearish PD raise here. We've got this first presentation tapped up into the inefficiency. holding this 15-minute IRL. What's up, Crux? How you doing? Notice the fact that we're also holding this inefficiency moving down to sell side. And if we're looking for time-based sell side, we need the ERL at PM session low from yesterday and then previous day low. These are both time-based swing lows. So this to me doesn't really count. These relative equal lows that we just swept. You could be using that as a low-hanging fruit objective, but I want to see expansion into a time-based element. Same thing with time over here. So preferably the trend would end around 10:30 to 11 o'clock if you can continue this move all the way down. But 932 putting in the high. Yes, our previous day low already. Yep, that's expected since we got the weaker asset here. Right, we got the SMT here. So looking for ES to reach further down into here. Now we could probably find some more ES targets. It could be SMT. I'm not saying it can't be, but I mean, we have this to me is pretty tight consolidation. And if we have a daily PD rate below this, it would make sense for us to reach down into here. You have a daily inefficiency there, also another daily inefficiency here. So we could potentially reach into this, get that swing low. Also the SMT. So I would still be bearish on ES, given the fact that it is the weaker asset. I want to see how we react to this inefficiency here. Obviously, if we close through that, then there's no chance we don't hit this sell side down here. But this is the first kind of line in the sand. Same thing with this. I want to see how we react to the order block paired with the inefficiency. That's going to be the more precise area we may want to reach into. So still wilting lower. I'm looking for 950 macro as an entry since we have no news today. No, not really. 815 is not really high impact, like anything of importance to me. I mean, you could see it maybe. I'd have never really heard of. That's like 815 news is like 945 news, where I'm not going to use it as changing the times of anything. It just is kind of there. And there's not really a crazy amount of volatility you can see from this, right? Like it's just the same amount of size as every other candle in my mind. Plus the news embargo technically lifts at 8:30. So I don't know how that would affect. That could be true. Yeah, seeing as like starting the 8:30 run up to here, SMT 9:30 continues, so you find an entry in this range. We'll see. You might be right. I've never heard of that before. So nice internal range premium down to sell side ERL, and you can see how perfectly we just touched premium there. So premium inefficiency on the 15, IRL to time-based ERL. Sell side liquidity here. But I do want to see how we react now to this PM session low. Previous day low. if we have the SMT there. I don't want it to hold, in all honesty. I want NASDAQ to continue lower. We're probably going to get a retracement back into this breaker, if I had to assume. Get a slight retracement up into there and then continue lower. But I want to see how this holds and also how the SMT at the bottom holds. Now, the dealing range I would look to trade would be this one. Since you have a short-term run on buy stops there and no subsequent turtle soup after that, this would be an intermediate term high, technically. Now, a good thing to notice is whenever you have a large expansion day, sometimes you can have, not sometimes, yeah, sometimes you'll have consolidation that follows. So notice how yesterday, from basically the height of yesterday's high all the way down to the low, we moved about 500 points, which is a huge move for NASDAQ, about 2.49% in one day. So after we liquidate all of that sell side, or as we move largely in one direction, we're either going to retrace or we're going to consolidate. So this, prolonged consolidation all throughout, I see all of this as consolidation. Okay, we're still stuck within the range between high and low, and they're sticking around it. Also notice how London failed to create any meaningful manipulation. So that's all consolidating. So trade it up into the gap there. Yes, we have this breaker in here basically. Technically it's over here too, but I want to say we react to this low end of the 6 a.m. candle, how we hold that 5-minute chart. There's not really any clear inefficiencies that's forming on the downside. And we have this short-term SMT here. So I'm going to be watching how we want to react to that. Just also tag the 1 hour inefficiency on BS. Yeah, no problem. Yeah, the key binds, the hotkeys are just so nice to use once you figure them out. Like Alt T for the line and all that stuff. I think it's Alt Shift R as well for the box. I mean, you can still probably click it faster, but just kind of makes you feel cool. Nice little short, good stuff. At 60-ish points. Good work. So back up into premium, into the first presentation gap, into the 5-minute inefficiency, also in premium of this range. So whilst I'm seeing how we want to react to this inversion gap as well. But I would preferably like to see this first presentation hold. I don't like the fact that we have this many bisis though. It's kind of speeding to get up into there. But we have macro time here in 20 seconds. Now the SMT on both sides is what kind of worries me. Here's macro time. 5-minute order flows Currently bearish. We didn't really close above this swing high. Obviously, if we do that, then that would be a long up to basically PM session high. So we're in premium, trading to the first presentation gap, also tagging the order block here. I want to see a reaction in this range, preferably with candle buys closing below 50% of this gap. Take a look at ES right now. A little bit further up than I would like. We also have all this low resistance buy side up on ES. Still no change to say delivery on the 5-minute here. Do have an inversion gap we traded through, but so 5-minute candle buys are closing below the IRL here, also within this little tiny 5-minute sibi. $42. $19,818. So we're still holding this bearish order block here in the first presentation gap. It's not really the cleanest opportunity. And the reason I say this is because we have all these bisis on the way up. There's only two, but this larger inefficiency. Now the problem is if you want to get back down into the sell side, we're going to have to slowly kind of get down and then speed once we get past the discount end of this. So I may have some resistance in here that we have to get through. It's the only issue that I see currently. Let me screenshot this quickly, send it over to predictions. So looking for premium of the range to hold. Only issue I have is the 1-minute bisis. That would need to be I'm looking at also this up closing candle here. Be a really, really tiny 1-minute change in say delivery. I would like this to see it just traded through completely. Same thing with these bisis on the way up. Just closing consecutively through them. Then once we get down to really like this portion, just see it speed through. The 5-minute is still looking decently healthy. We've got this 5-minute sibi in here. Can mark this out. That price is currently holding. Candle buy is closing within it. Candle buy is also closing below the 15-minute inversion IRL. This would be an inversion. So M15 inversion. So our fib projections, if we're bearish, still point to around this hourly gap. So notice how we're using this right here and this bisi, trading into it. I want to see it close below the opening price there, and that would confirm to me we're bearish. But this kind of support we're finding in the bisi and this sisti is a little, I'm just watching it right now. But you need to be watching both sides of the market. Whenever you're in a position, or if you're not in a position, you have a bias, say you have a bias. You can't have confirmation bias and only look for the things that would be supporting the reason why you're right. You need to be looking on both sides. So what are the bearish PD arrays that are holding? What are the bullish PD arrays that were maybe not holding or holding in contrast? They may point to the fact that our bias is wrong. So it's a constant scale. It's a constant, is it continuously showing me signs that I'm right? Is it continuously showing me signs that I'm wrong? And if we're bearish, we need to see those bullish PD arrays disrespected. And if we're bullish, bearish PD arrays disrespected. So like the best combination is if we're bullish, or if we're bearish, we'll do bearish. You need to see bearish PD arrays hold below 50%, whatever that level may be, mean threshold, consequent encroachment of a sibi, and then bullish PD arrays are closed through 100%. Okay, so that means if we have a sibi in the market, we should be holding 50% of that and then trading lower. And if we have a bullish bisi or an order block, something like that, we should be closing all the way below that. That's pretty common, but in case you just wanted a really clear explanation, that's what you're constantly looking for, especially on the 1 minute chart, that's why I don't typically suggest people if they're new or if you're struggling with finding a model, don't look at the 1 minute because you have to constantly do it more than that's necessary. Meanwhile, if you look at the 3 minute or the 5 minute, I think it's much easier to develop a model and it's less on your brain. Like on the 5 minute, I think it's way easier to trade. It does take longer for the candles to print, but it's less taxing for sure. And I think you can find larger ranges. So if you're bearish, let me see if I can. So bearish, if you want price to go down, bearish PD arrays, so PD array minus should be holding 50%, and then PD array positive should be traded through fully. So in this case, if this is a bearish PD array, which it is, we split this in half. I want to see candle bodies closing below 50%. A bullish PD array would be this inefficiency. I'd like to see a closure all the way through the bearish end, or preferably a closure through 50%, but all the way through it, right? So we should be holding bearish PD arrays and disrespecting bullish PD arrays at the same time. You shouldn't just be looking at one side of the market, and that's what you're going to do in the beginning, is just looking at just the bearish PD arrays. Are we holding just the bearish PD arrays? That's all you need. But your extra confirmation is, are we continuously closing through the bullish ones at the same time? And then same thing on the flip side, right? If we're bullish, you want to see bullish PD arrays holding, bearish ones disrespected. And the amount of time we spend in those PD arrays is also important. So the quicker that we react, the more weak or strong we are. So if we're like this, and this isn't a really good example, if we were bearish coming up into here, you would want to see this inefficiency. At the best case scenario, we just maybe tiny wick into that inefficiency with one candle and then we leave it, right? So that's like the strongest kind of reaction you want to see off of an inefficiency. The weakest one would be where we're trading into it multiple times, spending a long time in there, closing above 50%, trading outside of it, trading back into the gap. It's losing its efficiency. Like, right, if we want to come back in here and fill it and then leave, the best would be is if we spend the least amount of time in it. So this first presentation gap, the fact that we're kind of gyrating back in here multiple times over and over and over again, to me, does not like, it doesn't scream that we're going to continue bearish. And the fact that as well, we're holding this 1 minute SysD, it's not the cleanest price action, price delivery. We did just trade up into the 3 minute bearish order block. I'm going to mark that out, which to me is like the last line in the sand. We shouldn't trade any further up into here. It's pretty balanced in my mind. Do also have SMT here, which is nice. Short-term SMT. So we should see speed off of this now. Very tiny 1 minute SMT. So if this was in fact a turtle soup and we're going to reverse, I'd want to see it quickly displace and then take out an intermediate term low, which would be here, right? Because intermediate term lows are your true market structure shifts. So this low is filling a gap, and there's another short-term low to the right of it that's higher up than this one. So this would be a 1 minute intermediate term low. Not super important, it doesn't have a lot of weight to it, but since we're looking for a 1 minute kind of just expansion lower, then with the SMT, if this wanted to hold, we should see a closure through that, maybe a wick back up into it, and then come back down. So look how many times we're tapping into this order block as well. We're continuously just closing through this inversion gap. Sorry, this first presentation gap. Back up to RTH gap. Yep, so in contrast, here's your SysD. 1 minute change in state delivery. The SMT does not hold in this case. Inefficiency here, trading into it, and we're holding above 50%. Meanwhile, we're disrespecting this first presentation gap. Against the bias, so I'm not going to look to trade that, but now it's a little bit more clear. You have the SMT at the lows, previous day low. Basically macro reversal there. And then you have swing high up here. That'd be your bias of liquidity. But I mean, not the best. Not really a clean breaker in here, right? Where's the RTH gap? Oh yeah. I would look for the buy side up here. But we're still back into the consolidation range. You're still stuck in this range now. You got SMT on both sides of the market. Not clean. So here's your SMT here. Let me send another screenshot really quickly. So yeah, it didn't hold the first presentation gap, consecutively closing to inside this bisi, sorry, the inside the sibi. So that should tell you that we're not going to. It doesn't mean that we're always going to close through it, but it'd be a sign that we may want to. So this gap here, now what do we have? Well, we have a 5 minute change in state delivery. We close through there, that swing high. Got this gap within macro time, trading into it. Wouldn't be a bad idea. Potentially go long on there, target the buy side. It's against my higher time frame bias, so I'm not going to trade it, but that'd be a potential scalp opportunity, especially if you can narrow down the stop to maybe that swing low there. You also got that. So all the low resistance now is being purged. You got the Asian high, which I normally don't like targeting Asian session ranges as a true target. So this would be your short-term buy side. And if you wanted to reverse all the way up, then you look for PM session high. But you can see this is basically your pre-830 price action. Double Judah swings. And the reason I would say this is a double Judah swing is because we come up here, trade into short-term buy side here, displace. We fail to fill premium and continue to move lower, which would be expected for the 950 macro continuation. But we have Judah swing here with SMT, and then eventually we continue all the way back up. RTH gap theory. I like it. So yeah, I would see this as a continuation. We're going to probably see expansion up into the buy side. Now, if we were to come back into the range, I would not be interested at all. So if we were to come back and take out something like this low, or even really this low here, I would not be interested anymore. Overall, more difficult than is needed. Meaning this is not like a day that's, at least to me, was not super clear. Bias is a little bit more difficult. We're inside of choppy range. SMT on both the highs and the lows. Double Judah swing, expansion up, suboptimal entry with the low quality breaker here and the fair value gap. So, and if you compare this to Monday's price action, or Wednesday or Tuesday's price action, Tuesday large expansion, Monday, we'll go back to Monday really quickly. Monday I think was a lot easier to take a trade. This is the short that we covered in the market review, but a lot easier, I think, to trade on a day like this compared to something like today. Very clear one-sided Judah swing, move lower. A lot of low resistance liquidity in the same side of the bias. So we still have, 60-ish points to reach the buy side. I think this is a pretty clear market maker buy model at this point. So pretty clear, I think. Most people could see that. Now we could stall out here, maybe take out a short-term low, and then continue back up. But this, to me, looks like a market maker buy model. We're holding most bullish PD raise, disrespecting bearish ones. We got this. Let me clear this out. And then speed bumps on the way. Do we have any inefficiencies on the left side that could cause resistance? We have this larger gap in here. So future inversion. This would be a future IFEG. Meaning, as price closes through this goes back to what I was talking about before, where we want to see the bullish PD raise hold, the bearish PD raise not hold. So you'd want to see price close through this. Maybe come back to an order block, close again, come back to another order block, and then eventually reach back up and do it. It's going well, Plethora. How are you? It's been a minute. So look at the candle bodies here, holding roughly around 50%. Slightly closing below, but not a huge deal. We'll put a demo on just for fun. Not financial advice. So you'd like to see this inversion gap basically be traded through. Look for time of day as the exit. Also with the buy side. Now I just measured this retracement leg as fib projection for -1. You could use the PM session high as well. That'd be a time-based ERL. All the way up here. You could also probably take this entire fib too, and then align it up with -2, -2.5. Different options there. So we have this tiny 5-minute inefficiency here. Same exact purpose. I'd like to see it used as an inversion gap. You can see we're kind of wicking back and forth into it. Low quality order block here. Now, like I said, if it was to come all the way back down and really take out that low, I don't even need to see it trade into here. If it was to come all the way back into this, I wouldn't be interested. So I'm using stop placement would be at the fair value gap low, which is commonly talked about in the 2022 model. And that'd be passed through PD raise. So we got fair value gap, we got the bullish order block now, this inversion gap, tiny order block here that we touched into. So plenty of reasons why we should be holding. Also, this would be SMT. Now I do want to see some sort of a bisi form in here. We don't. I guess we have a breakaway gap in this range, and this would be your measuring gap. I'm not really sure. Too familiar with measuring gaps, but I want to see some sort of an order block, high quality order block here. This candle, the 1009 order block, is not super high quality, just given the fact that we didn't form an inefficiency next to it, to the right of it, but we did fill a gap. So if anything, I would really look to this as your bullish order block. But it's still like subpar in my mind. This would also be a bullish breaker on the 1 minute. Technically this entire range here. So as we trade into that, also we should not be reaching down into the low end of the breaker if we're bullish. You know, if you wanted to, you could probably trim stop to there and be fine. On demo, of course. So we're still holding that 1 minute gap there. I do want to see if there's short-term SMT on the lows. CES is putting in relative equal highs, which is fine. Also relative equal highs here. Tiny inversion gap in here too. Now, once we pierce above this swing high, notice how this swing high created the retracement leg into the gap and then is now displacing up. So this would be preferably an intermediate term low and a protected low because now we have a short-term market maker buy model in here. Now, obviously, my fill is extremely subpar. It's basically outside of the gap. But this is actually a good example where, okay, say you are looking for a setup and you get in and it's a suboptimal fill. Maybe it's outside of the fair value gap or while it's continuously moving. Your stop placement still has to be in a wider range, which is, so I don't really think you should be using RR as a reason to put your stop or to take profit. Same thing with, I don't think you should have a set in stone stop loss amount, like 20 points or 30 points. It'll never work like that. You want to always be basing it off of market structure on the current time. So if we're gonna reach up to this buy side, then that's where your take profit would be, maybe slightly above it. If we're not expected to reach down into the low end of the breaker, then your stop has to be still below this. You can't just jam your stop 20 points below your entry, then get stopped out, and then wonder what was happening after that. Okay, so we just took out that short-term high. This is where I would trim stop to this low. Okay, so this should be an intermediate term low. This would be a short-term low, meaning short-term lows we can have stop runs on. So if we wanted to turtle soup this area, that's fine to me. But now we've completed this market maker buy model right in here, from high to low to higher high. So if we can close, if this candle can close a little bit stronger and we have an inefficiency there, that'd be perfect. Because now we have a bullish order block, inefficiency, and we're continuously showing speed towards the target. So look how we react to this future inversion fair value gap. Now I've marked it out as this kind of wider range because we have an inefficiency here and an inefficiency here. So there's two gaps just combined together that I've placed on this inversion fair value gap. So look as to how we trade into it. We'll come back down, probably touch this order block. I think doing a demo trade every now and then is good for learning purposes. I don't do them often, which is why I execute on another screen, because sometimes people who are new especially will just focus on this number over here, or this number over here, or this number over here, and lose the benefit of actually reading price and getting the benefit of how to trail stop loss, things like that. And how to manage your position, what to look for as you're tape reading. So I don't like to do them. I also don't like to be used as a signal provider. That you're missing the point if you're doing that. So that's why I choose to tape read, and then if you want to take something based on your own conviction, that would be up to you. Quick. There we go. I think it's also easier to learn that way too. I could change the dollar to ticks. That's true. Still, same thing. I don't want anybody to use me as a signal service and then get mad because they took a loss, or because they're not even looking at how to tape read. And I don't think most people don't really do that. Like they don't, people will be taking executions on screen, which is perfectly fine. But in the beginning, it's not what you want to be focusing on. So now look how we formed a bisi in here. We're not even treating this as a future inversion for value gap. This is where you could be wrong and it still works out for you. So we're expecting price to chop around in this range. It can come up, fill it, come back down, come back up, fill it, come back down, come back up, fill it. And this is an example where you can be wrong. What the heck? You can be wrong and still make money. Right? It's perfectly fine if we were wrong in that scenario. Now we just took out the buy side. We're still looking for time of day. This is where you could trail stop to break even, maybe trim some risk. But now I would be looking for really any reason as to why we want to continue up into time of day, preferably. So 10:30 would be an optimal exit. Thank you, Fatal. I appreciate that. Good work, though. 2 for 2. But yeah, that like what Dan said. If you wanted to demo trade properly, I would say change all these money things to ticks. It's gonna be optimal. The only reason I don't do that is because I like to just see, at least on my other screen when I'm actually trading, what the stop loss amount is in dollars, because that's just what I'm accustomed to seeing. And trimming stop and all those things, I do it off of dollar value. It's just, it removes any calculations I have to do in my head mentally. That's really quick. I prefer if it's as streamlined as it can be. So like, for an example, if you had taken a partial here, or if I obviously took a partial there, an option would be to trim stop to break even. Can't speak. So in any scenario, you're paying the trader, and if it was to come back down and stop you out like this, it would still be an overall net positive trade. Okay. I still think since it's 1022, we're expected to make that new high in a time window where it's right to do that. We also were just slight retracement into an order block, slight retracement into a fair value gap. My stop is in a safe position. It's on a short-term low. And here we could soup it. If we do, it's not a big deal. I'm not going to keep my stop all the way down here. In the beginning, though, as you trade, you should not be trimming your stop at all. At least that's my opinion. You should not be trimming your stop at all when you start. You have to place the risk, accept the risk all the way through the trade until you hit stop loss or take profit. And you don't touch it. So once you put your entry on, you put your stop loss here, you put your take profit here, you don't touch it. You get one of the sides will hit. As you progress, you'll know when to trim your stop, when to move it to break even, when to move your profit objectives, which I think this is really the last thing you should be touching is profit objective. Exactly, low-hanging fruit. So you always want to be, what's the closest objective that's time-based and price-based that price is likely to reach? And if you can't argue why price should reach there at a specific time, it's going to be much more difficult to know when to trim stop and things like that. So the reason I'd even have this up here is just because of this retracement leg, fib projection -1. Not important that you need to know that, but also the time of day, 10:30 to 11 o'clock. If I want to see that new swing high form, we're bound to take out this high. So what you could be doing is maybe moving your take profit to there. And then, we're guaranteed to sweep. If we are, I would assume if we're in a high probability scenario, guaranteed to sweep that high. And then that would be all that's needed. So now you can hopefully kind of see, okay, when I talk about we're looking at this high to be at a minimum, that would be an opportunity to, in demo, maybe place an extra limit order there. Or if we're failing to hold a fair value gap, that would be kind of cautionary as to why you would enter or when you would enter, is you have to see more data. This is, if I get stopped out here, this would be like a perfect example. Put the execution labels on really quickly. But look at how the candle buys are actually closing within this future inversion gap. And then we got a wick right above the buy side. I don't like the fact that we're trading all the way through this inefficiency here. And we just used it slightly as inversion, but I'm not too worried. Notice how we're back into the stealing range here and discount. Now in my mind, I'm looking at this inefficiency here, this inefficiency here. Can we trade through them? If we're closing through them, that would confirm that we want to continue moving higher. We're just coming back to this reclaimed bisi. Whoops, I didn't mean to do that. Coming back to this reclaimed bisi. Holding it, candle buys are still closing on the above 50%, although it is a slight retracement. You have to allow for those things. And this is why if you have a journal whilst you're trading, it's really beneficial. And it's not something that anyone talks about besides a couple people that I've seen. Jared Tendler was the first person that I've seen that talk about it. But if you have a journal while you're trading, right? So for example, you're in this trade, or I'm in this trade on demo. I would take my journal out. Like, okay, my first take profit was hit. I'm now expecting a retracement, and I'm not going to be scared that a retracement is going to occur because my stop is in a safe position. And if it comes and stops me out, so be it. It's part of trading. So then you're already programming your mind to deal with the potential outcome. The last thing you want to do is expect something, is not expect anything, and then it goes wrong, and then you have this gap in your reaction time where now what do? Do you over leverage? Do you over trade? Do you react in a way you shouldn't be reacting to? That comes down to the psychology part of it. But if you're anticipating every trade to be a loser, which unfortunately sometimes you kind of have to do, or you're anticipating a retracement while you're in a position, while your take profit hasn't been met yet, then it's much easier to deal with it mentally. So someone who is not comfortable with seeing a premium PD array hit and then we move back into discount, which is exactly what price should be doing, right? We're reaching a premium array, buy side liquidity, short-term retracement to discount to offer more opportunities. And we're going to move back up into premium if we wanted to continue the bullish move. So this kind of retracement, obviously look how close we got to the stop loss. Extremely close. Within what, 5 points. So another mental block could be, oh my gosh, it's getting super close to my stop loss. I need to close it before it gets my stop loss. That's why you don't touch it in the beginning. You don't worry about it. Let it do it. You pay your stop loss a huge amount to do its job properly. You better best believe it's going to do its job properly. So if your stop loss is in a good spot, you pay it to do its job. So trust that it's going to do its job perfectly fine. You should fall in love with this stop loss because it's there to protect you, not to, ruin you. If that stop is in a good position and you're in a good trade, you're more concerned with this than with this. Now, as you progress, you're more then concerned with your limit orders being filled, meaning your stop loss is going to be all the way down here and it's going to be perfectly fine. You're not even going to worry about trimming your stop. You're more worried about, is price action still showing me that I want to continue being in this trade? So we're approaching time of day, 10:28, approaching also price, swing high there. Obviously, like I said, if you wanted to just keep it there, you could. I might extend it slightly further up into this just because I just want the most precision if possible. But now look, we're trading through this gap, looks good. Trading through this gap looks good. We're now back into this future IFEG we had marked out beforehand. And look at the unfilled portion is just this. So that would be the amount of time, the amount of area that we want to see kind of a slowdown in price. And look how we're kind of slowing down in here, coming back into this bisi, coming back into the inversion gap here. Everything to me is still pointing to we're bullish. And don't forget that while you're in a trade, you're also, it's just tape reading, right? Being in a trade is just tape reading with something on it. So you already have conviction as to where price should go. You already have your bias. You already have this, 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 and this. You just put something on and you're just continuously tape reading. So if you're constantly worried about this, your position size is too big. If you're constantly worried about this, your position size is too big. You should never be concerned with the dollar order, or the dollar amount here, or the stop loss being hit. If you notice you're constantly looking over here, it's just too big. You reduce it down. Because think about it. If you had 1 micro on and you're risking $40, it's probably not going to do the same amount mentally to you as if you're risking 2 minis like this. And I normally never risk 2 minis. This is just for demo purposes. So if you see those kind of things, it's pointing to you that there's something wrong. And don't take those opportunities as you have to try and fight against it. The reason your body has a reaction is because there's something wrong physically in the world that you shouldn't be doing. So emotions are a signal to an underlying problem. The problem is never emotion, and this applies to life and especially in trading, but emotion is a signal to an underlying issue. So if you feel anxiety, if you feel fear, if you feel physical pain sometimes of being in a position, it's all pointing to something is wrong And now your body is trying to show you through emotion, yo, fix whatever's going on because we can't live like this forever. Right? So we're right at 1030 here. We should see that swing high taken. I want to see just a little bit of an expansion higher. Eventually through whatever that fib projection was I marked out. Yeah, -1. From that retracement leg. Also look at the stages of price delivery in here. Consolidation to expansion to retracement to expansion. What do we expect at the end? Consolidation. So we should see consolidation above the buy side at some point whenever this expansion leg finishes. So this is where me personally, since it's time of day, I don't want to see any more retracements. I'm going to trim stop to above break even. And I would prefer just kind of trimming it really tightly to where I wouldn't want to see it. If we take out this high and come back down, I'm fine with that. I wanted to just see it expand. Spool is the correct term in this case, where we're just basically this price action here. So these kind of candles, I want to see it like this, where we're just spooling up. Not a lot of retracements. You know, I'll just move it to break even or slightly below. Okay, so we'll give it a little bit of wiggle room in there if we want to trade around it. But I'm more concerned with now the limit order being hit than the stop loss. And the risk is completely removed. So whatever happens, in this case, make money. Demo money. So there's your swing high. I'm going to trim it again. That would be all that's needed. Right, time of day, swing high. I'll screenshot this really quickly. Send it to predictions chat. But there is your time of day and buy side liquidity met. So that would be, remember I could have kept their partial there. There's your fill. But I just want a little bit more precision. Flux is recorded. We'll love to rewatch. Yep, it will be. I think I forgot to post yesterday's stream recording too, but yeah, this one's recorded right now. So we're just waiting. And this is another example where mentally, what could you be thinking? Or what would be an issue here? Well, as we get closer to take profits, a lot of people will just want to close out. And that's something you have to deal with as well. Of just as we get closer and closer and closer to the take profit, I want to close, I want to close, I want to close, I want to close. And then eventually you can't deal with it enough and then you close it. And then it goes to your take profit. That's another hurdle you have to deal with as you get better and better reading price. But there is your full market maker buy model completed. Macro entry there with the 5-minute change in state delivery. Suboptimal entry, obviously, but fill to fill and stop loss management as we go up. So I can trade. It's not all just hidden behind the screens. I'm just kidding. But I hope you've learned something from this. I'm gonna put this in future trades, I think. Yeah, there you go. Future trades should be posted. So there's your full TP, time-based, price-based, macro entry, everything in there. Confidence that price will get to my TP is my biggest issue right now. That comes from 100% just doing it. And for me, like, for example, the reason that I know we're going to just expand up into this time thing is because I've seen it so many times where I'm convinced that if it doesn't do it, it's just a low probability day or it's just something is wrong. Like you have to be delusional to that point, right? Like just delusional enough to believe ICT concepts is a thing in the first place. But I think, you know, learning how to manage stop properly, where to put your take profit, and obviously this extra little bit of using -1, getting a top tick there, it's not the biggest deal. this swing high here is what I'm trying to put you to focus on. This time-based high, 1020, wrong time, 1032, right time, right price. Are we in a 15-minute PD array? Now we are. We have a swing high here, 15-minute swing high. Not an ERL, I don't think. Yeah, it's not. So buy side from the 15-minute chart, also this 15-minute PD array. So 15-minute PD array, that's price. Time of day would be 10:30 to 11 o'clock, and there you go. So I didn't even see that 15-minute swing high, but so maybe I'll do one of these every now and then. I think it's beneficial, especially if you guys like it, just of how to manage the stop properly, live. But this is what goes on behind the scenes. If this is what my mental looks like, how I'm managing a trade, what I'm thinking on my other screen. So all this trades you see posted in futures trades, this is basically how I'm managing is. I mean, there's all those different tiny hurdles, right, that you don't even think about sometimes. But this is how you properly journal. So journaling, okay, price is coming back to my stop loss. We got within 5 points of my stop loss. Are you worried? No. You just continue to do your job. That's just to make right decisions and tape read. If it wants to come down into here, so be it. But if my stop is in a good position, it's not going to touch it. So that's something you can journal. The proximity between the stop loss, how you feel around there. How do you feel as we hit the first TP? How do you feel about moving stop loss? How do you feel about it getting within 2 points of your take profit and then it wants to retrace? Do you want to close out? How do you feel as price is leaving, is instantly going towards your stop loss, right? Because as soon as we entered the trade, it was just, where did we enter? It's really bad, Phil. All the way up here. As soon as we entered, a couple minutes later, we start to trade down into the area where we want to be potentially stopped out. How does that make you feel? So all those things are tiny mental hurdles. And I'm sure even if you didn't even put on a trade, just watching this trade happen, some of you may have felt emotions as price was doing those things that you're not even physically taking the trade, right? So all those different things you have to deal with. What are the emotional signals that show you, first of all? And the first point of being self-disciplined is being self-aware. So are you aware of you actually feeling those emotions? Are you aware of what you say, all those things? And then what is the underlying problem? Well, if the underlying problem for you is we're getting too close to the stop loss here, is it because you didn't take profit? Was that an underlying problem? Why didn't you take profit there? Why didn't you, is your position size too large? Is it the wrong time of day? Is it outside of your model? All those things are important and point to an underlying reason as to why this specific issue may be prevalent in your trading. And trading is just constantly getting better at something. It's just like the gym. You're going to show up, you're not going to see results, and then eventually you'll move weight up, and moving weight up is just conquering those individual fears and irrational beliefs and illusions and mental hurdles there is in this. Because once you understand what price is likely to do, I think the tape reading part of it is not terrible. It's just you're kind of looking for the same stuff, but a lot of the mental part of it becomes extremely difficult to deal with. Love how you manage the trade. Thank you. That's basically, for the most part, that's the easiest way. Is if you want proper management of stop, look for those retracement high to retracement low. As soon as you break the retracement high, move stop from here to here. Retracement low to high. Once you break this, you move stop to here. Same thing for bearish. Okay. You want to basically just be other way. So if we're retracing, move here to here. Once this is broken, move it to here. Easiest way to move stop. Easiest way. And then obviously as you take partials and things like that, you can be a little more aggressive with it. And time of day also is more aggressive. You can see probably as I moved trailed stop tighter as we got to 10:30. If I see price struggling a couple of ticks before my TP, I just close the position. I've seen it many times reverse right at my target. Yeah, I mean, sometimes that just comes with experience. So if you had, for example, what you could do instead to kind of mitigate that would be, if you have one position on, or if you're comfortable just closing out there, instead of closing out before it hits your TP, trim your stop. So trail your stop to maybe break even or slightly in profit, or maybe take something off there, maybe take half the position off. and then see if it can hit your TP. Because every single time you do that, what happens is you lose confidence in the model. What you want to do is build confidence. So the more you can let it just kind of do its own thing, hit the TP, hit time-based liquidity points, you build more confidence and you can hold it for longer. Like if you go back and you watch my executions 2 years ago, I'm looking for like 20 points, 10 points. And now, these are 60, 70 point moves sometimes. And the only reason I was able to do that is because you basically just get the reps in over and over and over again. You could also just do it with trend lines in the chart and not even demo trade. I've seen ICT doing this with Caleb lately. It's also a good exercise for us to do along during these trades. What do you mean by trend lines? Oh, you mean like with these? Or what? It is a good exercise. I do like doing the demo trades though on screen every now and then. At what point and what was the main reasons for you to change from bearish bias to bullish? So the fact that we had SMT at the lows down here, I was a telltale sign in the beginning. The fact that we were not holding any bearish PD arrays on the 15-minute chart, so we failed to really hold this breaker, all that stuff. 5-minute chart, if I pull this up quickly, we got a full closure through this swing high. But also, more importantly, this is the change in the state of delivery on the 5-minute chart. So 5 minutes is D. We've got this inefficiency that lines up with it. Also, time of day, 10:06. I entered right at 10:10, I think. So macro time in here. I wouldn't want to see it, like I said earlier, I wouldn't want to see it Judah swing 1, Judah swing 2, Judah swing 3, and then it comes all the way back down into the sell side. That just doesn't make sense to me. The macro is either going to reverse or continue. It's not going to reverse after reversal. So if this is a proper reversal and we're expanding up and we're breaking through these bearish PD arrays and we're holding the bullish ones consecutively, then I'm going to trust that this is a proper long entry, preferably within this gap. I would have liked, in hindsight, to have entered right here at 10:05 as we traded into this fair value gap and into the breaker. That would have been an optimal entry. Stop would have been the same thing right down here, below the breaker and below the fair value gap. Okay. And then obviously as we expand up, I'm looking for, because if you think about it, if we're bullish, this is the only profile we're looking for, preferably. So this has to be 9:30 to 10. And this has to be 10:30 to 11. So if we get a reversal in here, I'm not expecting to reverse again. I just want to see if your value gaps on the way up hold until time of day. And we're just looking for an entry in this chunk of the leg to just capture all of this, preferably exiting around high of day. And this will be a 15-minute or 60-minute PD array and around 10:30. Fantastic handwriting. But same stuff over and over and over and over and over again. Yep, no problem. Then for us to journal our emotions alongside the figment and trade on your screen, just as today. Oh, I see. Entry stop loss. Yeah, that makes sense. Oh, is ICT doing that? That's sweet. I like that. Yeah, I think I'll probably just do these demo trades every now and then. I'm not going to do it every week, every day, but there's always going to be a select few that as soon as they see me enter a trade, they're going to go to their evals or whatever and max contract, 10 contract mini enter in. And that's what I don't want to see happen. But I mean, if we all have a mutual agreement that everyone's just doing it on demo or no one else does it at the same time, then I'm fine with doing these every now and then. Right. Or Maddie, I'll move it to ticks or percentage. So people don't see the total profit and loss. But I don't know. Hypothetically, if you had access to 2 minis, that would be around 2K in profit, which that's the last thing you should be concerned with, but not a bad day. But I mean, a trade like this, if you really think about it, a trade like this once per week is all you need. Right? If you had 3 accounts or 5 accounts and you copy trade and you did this on micros, Think about it. You did this on micros. 2 micros would have netted you around $200. If you had 3 accounts, if you had 5 accounts, that's $1,000, right? You do 1 or 2 of those per week. That's all you need. You only need 50 to 100 points per week. So sometimes we have too large expectations in the beginning. Found this exercise very useful and no trades for me today. Nice. That's good discipline though. I like that. Anyways, so rest of the morning session is done and you can see we're consolidating in here. Before we leave, I just wanted to mention, okay, consolidation, expansion towards drawn liquidity. So we're going to get retracement after. Retracement is going to be back into discount. Retraces into discount, fills a gap, expansion, consolidation. So I pull up, I'm gonna pull up the notes really quickly. We'll go over this one last time before I wrap up the stream. This is from Ephesians. It's also posted in notes and PDFs. Everything starts with consolidation. Excuse me. Consolidation in here. You could also use this if you want to, but consolidation, expansion. The expansion is towards the drawn liquidity. It's a continuation of the trend. Therefore, we're going to retrace, and retracement is going to be back into 50% of the dealing range. This is where you find discount entries, and then expand, and then consolidate again. And if you're reversing, then you're going to see breaker entries. So that's why I prefer to only trade those 2 kind of entries, the breaker or the fair value gap and premium or discount, because if you're only trading retracement and reversal, those are the only 2 high quality entries you're going to get from those 2 stages of price delivery. I don't trade consolidations. I don't trade expansions most times. And the way you would trade expansion is through order blocks. So optimally, so a day like yesterday, you're going to be using order blocks to trade instead of your value gaps. So any high quality order blocks that would be in the range is what you're going to be using to trade. So, or stop runs, that'd be fine too. But order block there, touching it, order block in here, immediate rebalance, stop run in here. It wasn't the best, but anyways. So I'll post the stream recording later today, probably within like the next 30 minutes, depending on how it renders. I may actually upload this to YouTube. We'll see if I have time today. But I appreciate you guys sticking around and watching. Hopefully you got some knowledge about your own psychology or just how to tape read today, how to flip bias. All that stuff is important. But journal, screenshot, do all the things that are necessary to succeed. And I will see you guys, Lord willing, on Friday. No stream tomorrow since we have NFP protocol. And I was highly suggest, if you want to just practice your discipline, don't even open the charts tomorrow. Don't even open it on your phone. Don't open it on your computer. Don't even bring in the temptation to the possibility of you taking a trade. It's better if you just put it away. And then on Friday, if there was something, what we can do is we can all go back and look at it and be like, okay, this is hindsight. It's outside of our model. It's not a big deal that we missed it. Even if there was a trade there, even if there was people who posted wins on it, because you don't know what their model is. You don't know how they're trading. You don't know their discipline. They also could be lying to you and saying that this is the trade I took, when in reality, it's not. We're also, of course, expanding the post-stream effect. Trade him to this ERL. Yeah, ICT might be streaming tomorrow, so you probably could watch him, but look at it as a day off. Those who are really seasoned, obviously you could still watch it and tape read it, but it's just uncomfortable, to be honest, to even tape read a day that's low probability. So until I see you guys on Friday, take care, get outside, exercise if you can, and I will talk to you guys soon. Peace.